Okay, well, listen, thank you. Thank you, everybody, for joining. We appreciate you for jumping on. This is the first of many Third Thursday live streams we're going to do for the Master the Markets update. This is slightly different than what we do for our internal community. This session is designed for you to get as many guests on as possible, because we won't be doing like a sales presentation or anything like that. This is really to have a conversation, a simple conversation with the community, with the world, to talk about investing. We'll have specific topics that we'll be sharing on a monthly basis. Again, this session will be once a month on the third Thursday at 12 o'clock noon Eastern Standard Time. And the goal is to build a broad audience of people that want to learn about investing and the many aspects of investing. Totally free. Okay. Now, obviously, at the very end, we'll talk about some of the things we're doing inside our individual communities. But this session is information purposes only. And so today, what I want to do, I want to start this session off by introducing you to a really good friend of mine. This gentleman I've had a chance to know now for over 5 years. And I met him through someone, right? I didn't even know this person. You know, it's always said that you have about 6 degrees of separation and you can pretty much network through around the world. And so I literally knew someone who knew someone who knew him. And at the time, it was really perfect timing because I personally kind of felt like I was behind in life on investing because I was turning 42 years old, didn't know anything about investing, and just hadn't got my, my feet on the ground when it comes to my financial literacy. And so nevertheless, I started this community to really, embark upon that journey, which we'll talk about later. But in doing so, I ran across, Mr. Gaskins, just doing a few welcome calls. And just after maybe my second conversation, I realized this guy is brilliant, right? He's brilliant. And he has spent, decades, over a decade and a half, teaching himself to become a self-taught trader. And so what I want to do is I want to bring him to the front of the call, have him share a little bit about why that actually occurred. And then we're going to get into some of the basic stuff about investing today. So Mr. Johnny Gaskins, AKA the market guy, how are you today, brother?
I'm amazing, sir. I'm amazing. I am fantastic. I'm just getting over a cold though, right? I'm in good health, and I just muted everybody out, so you may need to unmute, sir. But I'm just getting over a cold. I sound amazing though, but I was able to invest while I was sick, right? From my bed. Isn't that pretty amazing? It gives us the ability to be able to invest from the palm of our hand. And that's what I love.
That's crazy. That's crazy. So Johnny, why don't we take maybe 90 seconds, right? I think we got to set this call up correctly because there's going to be a lot of people that are going to be looking to invest and learning how to invest. So why don't you take 90 seconds, maybe 2 minutes, and share with our audience today on what made you transition into looking into investing from the very beginning.
Wow. That's interesting. And so I started out, first of all, proud father of 3 amazing children. And so I was in like the family business, right? I grew up in a family business in the land development industry. And certainly I was the son that loved the business, right? But I knew when I ran across this information what Robert Kiyosaki talked about in the Rich Dad, Poor Dad, that you need to understand the financial markets. So I never got a chance to do it early on, but certainly what happened was I came across an information around a time called the Great Recession. And certainly what I was able to do is take what I had heard and start applying it, because we were in a position where we, you know, were in, I think everybody understands 2008, the Great Recession. And so I needed another way to make an additional income. And so I started learning from the best of the best, Robert Kiyosaki's advisors. I started learning from the best of the best. Some of those who started the education arm of TD Ameritrade, right? And so I learned the hard way, that 10,000 hours I took, right? But certainly I needed a platform. And so I found, obviously this platform. I was the nerd behind the scenes doing my thing. And you kind of found myself, and we took it from there. So
That's crazy. That's crazy. I think there's a couple of things I want to point out before we go to our next topic. And I want you all to really take a few notes on just that little sample size of Mr. Gaskin's story. He shared with you that he had been exposed to investing by Robert Kiyosaki's advisors. So he had got the knowledge, but he hadn't executed on it. He was a son that loved the family business in real estate development. But because of what happened in the recession of the real estate economy in 2007, 2008, he was forced to look for something different, right? So we all wake up and pray for prosperity, and we think that prosperity comes without pain, and it doesn't, right? He had to go through the pain of the recession, 2007, 2008, in order to force him to use the knowledge he had already gained, but never took into action. So I think that part of his story is so powerful, because some of you are in places of comfort right now, praying for prosperity, right? And you think that you're going to go from point A to point B without any pain, and it doesn't work that way. And so more people are pushed by pain rather than pulled by pleasure. You can write that one down. More people are pushed by pain than pulled by pleasure. Happens all the time. And so Johnny was pushed by pain to utilize information he had already gathered in preparation for his financial journey. So that's pretty phenomenal. We appreciate that part of your story, Mr. Gaskins. Absolutely love that. And so let's really jump right in, because we got an audience that's listening to you live. We got an audience that's on Zoom with us as well. Let's start with some of the fundamentals, okay, about investing. And when anybody hears about investing, the first thing they think about is stocks. We know crypto is sexy. We know foreign currency is sexy. But the most fundamental thing that people are familiar with when it comes to investing is stocks. So why don't we just start there? I think it's important to start there. Maybe you could talk a little bit about, what is a stock? Why is, and just let's start with that. Like, what is a stock? Let's start there, and then we'll kind of go through a couple of questions related to it.
Awesome. So, stocks really represent like ownership, right, of an asset, of a company. So imagine the top companies in the world, the things that you use each and every day, having a piece of that. And so when you purchase a stock, okay, you're buying a piece of ownership in that company. Like, you actually own a piece of the company. It's why it's a security, okay? And it gives you the right ultimately to participate in the growth of their profits in their business. I got a chance to go out and visit on several occasions one of the well-known investors in the world, Warren Buffett. I recently got a chance while I was sick to watch this 5 to 6 hour shareholders meeting, right? And what I learned is Warren Buffett owns just about he owns businesses and stock within businesses. And he owns just about everything you put your hands on and touch, from when it's created to when it's consumed. Okay, and so it really represents ownership in an asset within a successful company on the stock market.
Love it. I love it. I love it. Why don't we talk about let's rest in the stock section here for a minute, because when I think stocks at first, I thought that of course, I'm getting ownership of the company. Am I getting like a certificate or some paper? Can I put this in my safe? Like what really happens when you buy stock or you own a stock is the first part of the question. And then the second part of the question is, what is the difference between historically how people would invest in stocks maybe 10, 15 years ago and how people invest in stocks today, or the access and ability to do it today? Maybe we'll start there.
Awesome. So, of course, you can get stock certificates, okay? The actual piece of paper. But we work through broker dealers, okay? We like insurance. If you think about insurance, we work through broker dealers when it comes to the exchange of the stock that you own, the certificates that you would own. So back in the day, obviously, they mailed you the certificate, in the mail, right? You had that physical certificate. You could mail that in to exchange it for, what we call money. Right? You can mail that certificate in. Now we work through these broker dealers, okay? They have these electronic computers and systems, right, that we all use, where they store the stock that you own now, right? So you can log into your stock broker account to see the stock that you own. Okay, so essentially, we've moved through a wave of technology from where no longer we have to exchange the physical paper. We can have these electronic certificates of ownership in the company. And so if anybody on this live owns stock, every now and again you may get emails because they're responsible for sending you information. The broker itself is responsible for sending you information about that company, right? The shareholders meetings. So you'll get these emails because you are owner in the company. And the evolution of technology has taken us from the floor and exchanging paper, meaning buying it, to now to the smartphone, where we can use these micro sharing apps from what I call the most expensive real estate on the planet. We can use our cell phone. That's the real estate I'm talking about, to now purchase and buy stocks from the palm of our hand. And we're still using that old system, the broker dealer, right? Because that's the way it's set up. So it's allowed us to do it a lot easier.
I love it. I love it. I love it. Okay, so we're in stocks. Bullet point number 1, I love the explanation. So bullet point number 2, value, right? Value. We see on the news, whether you're watching Fox News or CNN or CNBC, whatever it is, we see the value of these stocks increase and decrease, 0.5%, a whole percent, or whatever the case may be. What are some of the factors that are driving these stocks to increase and or decrease? Because again, we want to be on the side where we're profitable, right? Which we'll talk about making money in up and down markets. But what are some of the factors that really drive the value of a stock, whether you own it or not?
Awesome. So the value is driven by many, many different factors, right? Fundamental, what we call fundamental factors, and a lot of them are technical factors as well. And so some of the fundamental things that influence the value of the stock itself are like economic conditions. This is recession proof, right? How can you stay recession proof? That's what we're really getting at here. And so the economy, the US economy or whatever economy, influences the value of the stock that you own. If people are buying and selling that product or service, right? The company performance. How is the leadership? Is the CEO doing the right thing or the wrong thing? Right? World events like wars, okay, influence the value of some stocks. and many other factors, things like just many other factors. And then you have this high frequency trading, okay? That literally within milliseconds we're executing trades. So the fundamental and the technical factors influence the value of the stock itself, right? The iPhone, are we buying iPhones or not? And so that influences Apple's stock, right? So many different factors on whether it rises or falls in value.
So let me share some things that people have asked me about trading or buying stocks.
Okay. Okay.
I all the time I get questions like, it seems like it's gambling. Some people, I promise you, man, I could be having several conversations, and I don't know if you in the audience have ever had this question asked to you as well. They like, man, stocks just seem like it's gambling. You know, they looking at the lines, they'll up or down. They don't really know. They got these bots trading sometimes. You got humans trading sometimes. Is the performance of the stock predictable? Like, can you really predict what's happening or what can potentially happen with a stock going up or down?
So obviously, short term, you have to look at technical reasons in which the stock will move. And obviously, we benefit from that within our community and utilizing some tools and resources. From a fundamental, like fundamentally, you really don't know. Do we know this recent war that is in another country, Russia, and the other countries are in? We didn't know those things were occurring, right? COVID. So some of those things we really don't know if they're going to influence it long term. Obviously, the value of the stock can fluctuate over time, but we try to stay tapped in, right, with the experts. So we know when to take that loss early. We know when to take that profit early, right? And so that's a little bit about that question there.
So you mentioned COVID, you mentioned world events like the war. Would the impact of the Zoom business be a great example of what an economic or event that happens in the world in terms of stocks value going up or down, and what happened with Zoom?
Oh, yes, yes. So obviously with the not just Zoom, right? But Zoom was the most well-known. When COVID took place, guess what? We needed a way to still communicate. While we had Zoom prior to that, now everybody was forced to do what? Go virtual. And if you love people, it's hard to look at them over the computer, right? You want to be in their presence physically. So it opened up the door for virtual learning, virtual education, virtual meetings. Well, Zoom benefited from that for that period of time, meaning Zoom stock was influenced because COVID took place. Zoom stock did quite well, and all the other stocks that allowed you to do things virtually. So obviously, they can have a negative effect on some companies and have a positive effect on other companies and assets.
Gotcha. All right, so I need you to break something down for me, because this is one of the most frequent questions I get when I talk about investing. When people ask me about investing, is that they hear investing, they know about stocks, but then they hear New York Stock Exchange, and then they hear the NASDAQ, and then they hear the Dow Jones Industrial, and they don't even know what the differences are, right? The New York Stock Exchange, the NASDAQ, the Dow Jones Industrial are three of the most popular exchanges that I get and hear about. Can you share with our audience what are some of the differences between a company listed on the NASDAQ, a company that's listed on the Dow Jones Industrial, a company that's listed on the New York Stock Exchange? Break that down for us.
Right. So the New York Stock Exchange is probably the most popular. You'll see them ringing the bell, right? Ringing the bell, and that typically happens at the New York Stock Exchange. But number one, they are exchanges, right? They are exchanges that that hold these companies with value. So the NASDAQ has which is most well known, the NASDAQ 100, which holds about 100, a little bit over 100 of the technology stocks. Very specific to technology. When you hear NASDAQ, think about technology. When you hear the S&P 500, then you want to think about the top 500 companies in the world. The top 500 companies in the world. Okay, and the Dow Jones is, you know, one of the older ones that holds a smaller group of companies, and you'll find that these companies will be listed on one of the exchanges, okay, on one of the exchanges primarily, but they all talk to each other, right? Is why we can access all these companies. So they're known, obviously, the S&P 500, the SPY, top 500 companies. They put them in like a basket. Okay, the NASDAQ 100 puts them in a basket, and we're able to trade those companies all at one time. So certainly they're interconnected in some form or fashion, electronically, especially these days.
Gotcha. I love it. So I want to pivot a little bit. Because now we've kind of got our minds wrapped around stocks. We got our minds wrapped around how they get their value going up or down. We understand a little bit about the exchanges, which ones are technology focused, which ones are conglomerates of the top 500, and et cetera. Why don't we talk a little bit about history? Because I know you and I have been spent some long hours talking about the performance over time, how some of these exchanges have been performing. Because again, people want to put their money in places that they feel is going to grow, where it's not going to be 100% loss. All right, those are the biggest things that intimidate people about the investment world. And I know you and I have a couple of pictures that we can share with people just to kind of give them a historical view of what we're doing, how we're doing it a little bit different, to put people in a safe place to feel confident that they can actually be good in the investment world.
Awesome. So we learn from history, right? We learn from history. Unfortunately, maybe I should say sometimes we don't learn, is why we have these cycles up and down. We have new generations coming on, sometimes making the same mistakes. So we can learn from the histories and the cycles that the markets go through. Okay, the history and the cycles that the markets go through. And sometimes you can somewhat, not 100% predict, okay, but you can somewhat predict a little bit the future results, potential future results, based on the historical performance or based on what history has provided. Okay, you can look at that historically, you can look at that technically. Okay, and it just depends on, if you look at a company like Berkshire Hathaway, Warren Buffett's company has performed quite well over that period. And he owns several businesses, right? He owns several stocks within businesses, like 6% of Apple. But one of the interesting things is, based on the performance that's happening now, guess what somebody like Warren Buffett has done? He sold all of his bank stocks. He believes that banks are not going to do well here in the near future. And so he actually owns just Bank of America, I believe, because they have an agreement in place. But he sold all his shares in banks based on the historical performance, right? And based on the current events that are taking place right now. So over time, when you get educated, you can somewhat tell what is going to take place in the future based on history.
I love it. Do we have a picture that we can show our audience today of some historical stuff?
Definitely. I wanted to just kind of give some insight on what exactly we have when it comes to what we take advantage of. Okay, what we're able to actually take advantage of when it comes to investing. All right, and this is a key fundamental thing. I'm going to share my screen here for you. just to give you some information and education, if that's okay. All right. Hopefully that's okay with everybody. Obviously, I just want to cover the, disclaimer when it comes to historical performance. And when you talk about disclaimers, we have to cover the simple fact that we're not investment advisors. Okay, we're not broker dealers. We're here to provide education and information for you to have the potential to save your family and your future. Okay. And so obviously you got to cover your mindset. Mindset is so important. You have to adjust your mindset when it comes to investing. You cannot think like a consumer. You have to shift over to what would an investor do? And all of us know that Robert Kiyosaki is the best at that. Well, hey, listen, one of the technologies that we have access to and we can benefit from, here's a little bit of that performance, right? We've outperformed the S&P 500, this technology that we utilize today. All right. And so this technology, if you look here, based on $1, all right, this is an example based on $1 starting out back in 2005. Can you believe that? 2005, almost 18 years this software has been performing. We've outperformed the S&P 500 true return, which includes what we call management fees. Okay, and so this is kind of a overview, but can I dive in a little bit more, because we've utilized the technology over the past few years, and I'll be honest with you, it has performed almost close to 100% return. Okay, this is what we call a value of $1,000. If you had $1,000, and you were doing what we do best and taking these ideas from these experts, we were able to generate a return of close to 100%, 91% return over this period, which is quite amazing when it takes me like 2 minutes, right? But let's dive in a little bit deeper. Is that okay? Because what I want to show you is 1 month of performance. While past performance can be different, what if on your lunch break, like now, you were able to take these ideas, right? What if in retirement you were able to take these ideas? In 2022, we saw performance within the month of November. While we had losses, while we had gains, we outgained the market in upwards of 12%. So in this particular month, 12% return, which is quite amazing on your money. Okay. And it's real simple, right? It's real simple where you review the idea. Okay. You put it in that micro sharing app and you have the potential to profit. You have the potential to profit, to become recession proof. You have control over this, Mike. They got control over this. Okay. And so obviously this is a review. I love Trend Pro is what it says here from Equity Prime. After some practice and hard work. Okay. After practice and hard work, I was able to make close to $700 profit at one time. Okay. $700 profit at one time. I'll tell you, this solves that $500 problem that exists today, that $500 problem, Mike, that exists today for some. And so hopefully those numbers help some folks out there.
Yeah, I really love some of the technology that we get a chance to utilize. More importantly, I like the fact that we can show people how they can get access to these types of technologies for literally pennies on the dollar, which is amazing, right? Along with the support, along with the education, along with all of the stuff that comes with working together as a unified body of one. And I just so happen to know that we got a notification earlier today to take action on a trade idea that came out. So, Johnny, if I can put you on the spot, man, I want to put you on the spot
Right,
today
right.
on the live session and
Uh-oh.
maybe have you just execute in real time the trade idea that we got today to show our audience how simple it is to really implement some of the things that we're talking about.
Yes, sir. Yes, sir. So here's what I'm going to do, Mike. I'm going to share my screen and show this live, right? It doesn't take very long. It doesn't take very long. And so what I'm going to do is I'm going to share my screen. And here's what came out. What came out was an alert, an idea. Okay, an idea came out. All right, and this idea said, hey, sell 50% of whatever you're invested in. This is what it simply says. What does 50% mean? Half, right? 50% means half. So I'm going to share my screen here in a moment, and then I'm going to show you simply how I'm going to do that. Now, obviously, we couldn't predict this and it happening in this way. But I'm going to share right now, and then we're going to kind of walk through this on this live, okay? So hopefully everybody can see my screen. And again, whatever broker that you use, you can use any broker, friends. This broker in particular is called E-Trade, okay? This broker is called E-Trade. Well, I happen to own about 199 shares in this account. Okay, 199 shares in this account. Let's just call it an even 200 for the sake of 50%. What's half of 200? 100, right? Simple math, right? Simple math. So what I'm going to do is, here's all you do. You would select the QLD. That's the symbol that we trade. Okay, we get this from the expert. I'm not doing any research on this. I'm just executing the idea. We're selling 50%, which is 100 shares. Okay, 100 shares. We want to do it at market close at 4 p.m. Okay, the stock market closes at 4 p.m., friends. All right, so we do market close, and I'm going to preview this order. So again, QLD is what we are in right now. Okay, this is a recession-proof strategy. All right, and so we're selling 50% because why? Because the experts in the technology told us to. We're selling it market on close, and it's just for today. I'm going to preview this order, and I'm actually going to execute this live, okay? So I'm just double checking all the numbers. We're selling 100 shares of this QLD, Pro Shares Ultra QQQ ETF at market on close. And I'm going to hit place order, friends. That is it. I am done, right? I just wait for the market to close. I get back on to my day, right? I get back on to my day.
That is so crazy. 15 seconds max, 30 seconds if you're drinking water, right? 30 seconds if you're drinking water.
And 1 minute if you're talking, right?
1 minute if you're talking, 1 minute if you're talking, right? And so we're excited about being able to show people how to, again, get in and out of the markets, understand the value of, controlling the assets yourself. And here, let me ask you a question, Johnny. This came up as well. Somebody asked me, okay, I make some money utilizing this technology or some of the technology that you guys have, but specifically this one that we're talking about today. How fast can I get my money from my broker into my account? Because I got a bill to pay and I need to know how fast can I get my money.
Wow. So that's interesting. So I have a couple of brokers, right? So when you do a transfer from your investment account to your checking account, it takes about 1 day. I just checked 2 brokers. The next business day, as long as you do it by 4 to 5 or about 4:30 p.m., depending on the broker, it'll be there the next morning. Okay, now you can also do a wire transfer that same day, as long as it's before a certain time. So I just tested this, right? I literally had that situation, transferred a few $1,000s, right? The next morning, I get an email from my bank to say, hey, You just got to deposit in your account from your, broker. So it's there the next morning. If you're able to withdraw that, sometimes it may take a couple of days to clear, just depends on the exchange and the broker. Okay. But once it's cleared on their end, then when you actually do the transfer, it takes less than 24 hours really for that to take place.
I love it. I love it.
Oh,
24
no.
hours.
Watch this. Rob, the platform, the micro sharing platforms, it's available right away, meaning you can swipe. The larger brokers don't have like the credit cards. You have to use the banking side. But like those other platforms, the micro sharing apps, they got these check cards where the money's available to spend right away.
I love it. That's even better. We need that money right now, man. Run me
Listen.
my money. Run me my money. Okay, two more questions and we're done for the first session today. Okay, so I'm thinking about investing. I'm on the line. I'm watching the live feed. I'm excited. I think I can do that. I think I can take 15 seconds and execute the trade ideas and that kind of stuff. How much money do I need to start investing? Do I need $10,000, man? Do I need $1,000? Like, how much do I need to execute the strategy that you just shared with me? Because, I've been working. I'm working my butt off. What do I need to get started with just investing? Like if I wanted to do what you just did in that account.
Yes, sir. Yes, sir. So with the ability of the micro sharing apps, you can buy micro shares of the stock. So you can do it for like a couple of dollars, $5, $10, $15, $20. Okay, to get started. All right, to practice. You can demo this. I always say, don't be like the lottery winners and wait to get your to understand finances, and then you win the lottery and then spend it all. Right? Practice. Use small increments. So when you get those funds, you're already in the mode. So you can do it with a small amount of money. All right. Once you get ready to go and decent, I always suggest $100 to $200 to get started with. And then here's what I'll have you think about, right? Think about how much money you make on a monthly basis. Think about how much money you make on a monthly basis. That's different across every household. Build a stockbroker account to that number. Save and build your stockbroker account to that number, and then you'll be ready to invest, because that number you can relate to, whether it's 1,000, 3,000, 10,000, or 20 to 30,000, right, per month. That's what I always say. Hey, listen, at some point you want to get to what you make on a monthly basis in your household. But you don't have to start there, right? You can start with a couple of dollars.
I love it. And that means everybody can do it. I mean, if you can start with $100, $200, that means everybody can be ready to invest today. You know what I mean? And I love that. Okay, so last thing, we got some people on the line watching the live stream. What do they need to do now? Like, what do I need to do? I know we got guests that are on. You may have been invited on by someone. What do these guests need to do next? Because we're only doing these sessions on the third Thursday of every month. We're not going to see these folks again for another 30 days, right? So the third Thursday of every month, we're going to do a live Master the Markets call like this for guests, covering a different topic based off what's going on in the world. And today was the kickoff of these sessions. But as a new person that's on, listening for the first time, what do they need to do next?
Yes, sir. Yes, sir. So if you were invited to this or you joined from a live, hey, listen, we have a community, right? We come in numbers. We have a community and we help people, right? So what you want to do, if you were invited, obviously get back with that person for the next steps on how you can become recession proof and get access to tools like we just showed you, right? A couple of seconds. You can do it on your lunch break, right? You can do these things to build. That's what Robert Kiyosaki did. He worked for Xerox, and then he built a real estate investment portfolio while he was working full time, right? So you gotta get it going, right? But get back with that individual. Obviously, you can reach out to myself, Johnny Gaskins, or those that for Mike, Noble Mike, right? Reach out ask for more information. Hey, I joined the live. What can I do next to become recession proof? Okay, what can I do next to become recession proof? Well, we got some free things, Mike, to give out, right? We have a free app that we give to everybody. Ask for the free app. Say, hey, can you send me that free app? Right? Can you send me that free app? I don't know what you were sharing, but I understand that I need to change my family and my family's future. So get back with that individual that got you on and say, hey, can you send me the free app? Okay, get connected, because it's better, like you said, it's better to be on the inside and get the information than be on the outside, right? So get connected with our community. We just so happen to have a Thursday call. I've been doing that for how many? Couple of years now, right?
Years, yeah.
We started out genuinely answering questions. Genuinely answering questions, and that's developed over a period of time. But every Thursday we do that at 8 p.m. You can ask for that information as well. If you're looking for more, just ask for more, right? Hey, I want to get recession proof. Okay, how can I become recession proof?
I love it. I love it. Listen, man, I appreciate your time today. We look forward for the next session, third Thursday next month. We got some great topics to share. If you have a topic that you just been, staying up at night, can't quite figure out answers to, we love for you to submit them to our community, and we'll put them on the docket to be covered. Okay, we'll put them on the docket to be covered, because we know people could be listening to this session from all around the world, from all different types of backgrounds. And we want to do our best to help connect the dots and provide clarity to the world. So, Johnny, the market guy, man, we appreciate you. We love you. Look forward to getting back on with you next month.
Yes, sir.
On the third Thursday of the month. Thank you, sir.
All right now. Thanks, everybody.
Bye now.